Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market rundown, the bulls had a big reaction in part due to some bullish news out of Hong Kong with potential resolution or at least steps towards it. Either way, the market responded well to it and brought us right up to our resistance level of 294.24. That's the highest price we have seen on this bounce, and that is the level that we are watching tomorrow. In after hours, we're still, well, you gotta turn after hours on, but we're still right at that resistance level. So we're either going to see another rejection, which is entirely possible tomorrow, or we're going to break through. We have the oil inventory report, which could play a short-term catalyst, and it's all about what the other sectors do. Is QQQ going to break its daily lower highs? Is XLF going to change the daily trend? Is IWM going to change the daily trend? These are all questions that have to be answered by the bulls, and if we see a bull break on SPY and no bull break on QQQ, for example, which is what happened last Friday, then we have to take the bull break from SPY with a grain of salt, because we can assume that the bulls are not going to go very far unless those things happen that I just mentioned. So looking at the most important support for me on SPY, 289.27 short term. As long as that holds, the bulls are definitely in the driver's seat and the pressure is on the bears. IWM, so what I have to see is this low of 146 hold, and the bulls have to break 150 to give us that little daily higher low and higher high. Because again, every little bounce is just a daily lower high, keeping the bears in control of IWM. QQQ has to break its resistances, and not just one. One's a good start, but we want to break all three of these levels. 188.97, 189.46, and 68. Those are the three resistance levels that are right there, and the bulls have to get over all three of those for a clear, convincing break, and they're going to be tested potentially tomorrow. So the daily support level, 185.03, that's our short-term line in the sand where if that is held, the bulls are comfortable. XLF, here's the daily trend change the bulls have to see. The low of 26.41 is the higher low, and the bulls must break 27.06 to change that daily trend with a higher low and higher high. So 27.06, and then we would be looking up at 27.17, but that's the most important level for me, because during this entire pullback, we have not seen a daily trend change for the bulls in the financial sector. The financial sector, being the second largest holding in the S&P 500, certainly has to come along for the ride if the bulls are going to be convincing. The healthcare sector is the number 3 sector. So we're looking down at short-term support, and the bulls have to break the high of last week. 91.09 needs to break for that convincing move, because again, these lower highs are just very clear, and I'm not much of a trend line guy, but we can definitely draw downtrend resistance lines hitting all of these points, keeping that downtrend intact. Breaking those lower highs breaks the downtrend. Biotech sector dropped to lower lows, and this is one of the least important sectors that we look at as far as its general impact in the entire S&P 500, but we're looking at 81.52. And if we don't break 81.52, it's just a daily lower high, and at a bit of a disadvantage because we're coming off of a new fresh low today, where at least all the other sectors we looked at have a higher low to be working with. And the VIX pulling back down towards that key short-term level 1710. If that breaks, this is a tightening range breaking bearish, and after 1710 is 1550 as the two levels that we are watching here. But again, the FOMC is going to be, what, 9 trading days from now, I believe. So there's a lot of time still left. And a lot of people were saying, myself included, maybe we are going to trade within this range until the FOMC. If we are going to see that happen, we have to see a rejection from this resistance and drop back down to the mid 280s, or the upper 280s at least, on SPY here. And otherwise, there's just not enough time, or I should say there is too long of a time period before the FOMC where we could see a bull break before then. Keeping in mind, last time we had the FOMC, it led to an all-out dump. So it's entirely possible we get a bull break into the FOMC and then get a bearish reaction on the FOMC. So certainly going to be on everybody's watch in just a couple weeks. Gold bulls keeping up the strength. 1555 was resistance, and we are breaking that level, although not convincingly yet. We only broke it by $2, so that's a double top as far as I'm concerned, but the bulls are certainly not done testing that resistance level yet. It would only be a red flag as a double top if the 4-hour uptrend were lost. So anything on the 4-hour chart above 1533 is just a higher low, keeping the bulls strong, and the amount of space that we have to consolidate and keep the higher low compared to 1533, plenty of space for those bulls to work with. So looking for daily continuation, the uptrend remaining very much intact. And if it's going to follow silver, silver's certainly already breaking out in a big way, getting follow through. 4-hour higher low is 1917. We got the bull break of 1957. And if we lose the 4-hour uptrend, all that means is zoom out and look for a daily higher low to form. These bulls are extremely comfortable with the amount of space that they've created for themselves, specifically silver. Gold does not have as much space to work with before our last daily higher low was established, but silver bulls are extremely comfortable. And when we lose the 4-hour uptrend, just a daily higher low to be watching for. Also, these exponential supports, this is the 12 period, and it's a pretty decent visual guide where our past periods of consolidation have held that level. Bull miners following through by breaking to higher highs as well. Nice strong close. The S&P 500 closed near the high of the day. The bull miners closed near the high of the day. So the clear break of 44.74 and anything on the daily time frame now above 38.69 keeps the uptrend intact. I watched the hourly uptrend on the miners because they only trade for 6.5 hours during the trading day, and the commodities trade a lot longer. So essentially the equivalent of the miners hourly time frame is the 4-hour time frame for commodities. I view them almost the same. So I'm watching the hourly uptrend, and when the hourly uptrend is lost, that's when we look for a daily higher low to form. So anything on this hourly chart above 42.35 is a higher low in my opinion. Oil with a ton of volatility the last 2 days. So commodities is coming alive, and the fact that we have 3 times leverage ETFs, again, I've been screaming it from the hilltops for months at this point, but commodities have great opportunity. They've had great opportunity the last few months, and they're going to continue having great opportunity in the fall and through the winter, in my opinion. So looking at this chart for oil, we're getting nice and tight where we did break support, but just barely, and this was an absolute V-shaped recovery. And this, to me, on the 30-minute time frame, that just shows me algo and bot buying, because that is not normal price action to be that extended and get that much follow through with no consolidation. So at this point, healthy consolidation is taking place, and we saw a little bit of a sell-off at the end of the pit, right before the pits closed at 2:30 Eastern, and now we're looking at the potential of a 4-hour bull flag. Pretty much the scenario as we are at daily resistance. Here's our clear lower highs: 57.43, 11, 56.86. The bulls are trying to confirm this 4-hour bull flag and start to take out those resistances in the $57 range, but pretty much with the inventory report coming out, that's going to dictate whether we break through resistances or whether we reject and stay in this tightening range. That's the daily range. If we're looking bigger picture and at the weekly chart, the most important resistance level for me short term is 57.43. And that is because it is a clear pivot point where we saw a significant bounce of 12 plus 14% or so, and then pulled back and dropped all the way back down to 52. So as far as pivot points go, these are the most clear levels for me, and that's why we are approaching this key resistance. And if you look at this chart on oil and you look at the SPY daily chart, they're extremely correlated. The only difference is oil pulled back a lot more significantly 2 days ago, and in my opinion, that was a bit of a flush out before this bull move. But regardless of that, if we compare the two, let's do that real quick. So pulling SPY up, and you can see they certainly overlap in a lot of places. It looks to me like SPY had initially a more significant pullback mid-August, and then oil had a more significant pullback just 2 days ago. But other than that, the peaks are lining up very similar, and I do believe I add oil to the list where I said I need to see XLF change the daily trend, IWM change the daily trend. I want to see oil break these resistances if I'm going to believe the S&P 500 bulls as well. All of those things need to align for us to be very convincing with this break and to be looking for a good amount of follow through. Natural gas bulls on absolute fire. So we've been watching for a long time for natural gas to get going, and it's certainly doing so. And this is now changing perspective, where before I was talking about the potential weekly inverse head and shoulders pattern. That's still a possibility, but in my opinion, it's a less likely scenario. And if we're going to get a bull break, it could be a daily cup and handle, where essentially we got 250 resistance after a big move today, and we're watching something like this, where if we can't break 250 initially, we're going to look for a potential daily bull flag and then an attempt to break that resistance. The inventory report is tomorrow as well. So just like oil, the inventory report is going to dictate whether we test 250 resistance or whether we pull back and look for that daily higher low to form. So we haven't formed a daily higher low since 212. The bulls are running away with it to a certain degree. The daily RSI is getting above 70 for the first time since that insane peak that we saw. So the momentum is clearly shifting. And the question is, can we break that key resistance level, or do we have to pull back for a daily higher low to form first? And I personally, if you're not already in a position, you want to be waiting for consolidation on the daily time frame to be looking for an entry, in my opinion, because if you're not, then you're going to be gambling on the inventory report. We have no idea what those numbers are going to be unless you are a fundamental natural gas analyst that puts in dozens of hours studying data. But otherwise, risk to reward does not favor an entry up at these levels. Ideally, we would wait for some healthy consolidation. Looking at it on the 12-hour time frame, again, RSI levels highest they've been since that big spike. So it's getting interesting in the commodity space, as if it already wasn't interesting enough with what these bull miners and precious metals have been doing. And we'll see if the bulls in the S&P 500 can get that break tomorrow. 2 more trading days in the week. Thanks for tuning in. We'll see you next time. So the ducks have slowly transitioned away. There has been some sightings. I haven't seen them in 4 days, which is the longest it's been. So I assume they're getting ready to fly south for the winter. So the next task, I still have to add manure and rotting wood and cover up those beds that we just made, but got some more mulch and already put down some manure thanks to Joshua here. Cleared out a bunch of grass. So I'm covering all this with mulch, and we'll do strawberries here next year. And these are all the raspberries behind them, so we're going to weed those and put some mulch over them. And probably going to try and put some peach trees back there, but that'll be later in the fall. I'm going to plant a bunch of bulbs for flowers to come up in the spring here around the waterfall as well. And then the next task after the mulching of the strawberries and the perennials will be making a big circular bed here and making it for monarchs and hummingbirds, just a whole bunch of perennial flowers. So we're going to have to cut the grass real short, put a bunch of wood as a perimeter, and then put mulch and cardboard on top of that and kill off the grass over the winter and plant stuff in the spring. Just found out this is an edible variety of dogwood. So these little things are, it kind of tastes a little bit like a peach, but it's a very strange texture, and most of these aren't ripe just yet. But always cool to know. There's a bunch of them around town, so I was walking downtown the other day and just stopped and ate some fruit off the tree that most people wouldn't really know would be edible. The inside, yeah. Peach.